Hi, welcome back, guys, and we're going to continue our basic class. And we're talking about base and quote currencies. All right, so now the base currency is actually very simple to identify. The one on the left hand side is your base, while the one on the right is your quoted currency. So let's dive right into the chart and see. So here we have gold against the USD. So what this simply means is 1 ounce of gold is equivalent to 4,300, and we have GBP USD. What this simply means is 1 GBP, 1 Great Britain pound, is equivalent to 1.34261. So if you're presenting £1, you'll be issued on the exchange market $1.342. That's what it simply means. All right. So here, dollar is the base and USD is the quoted currency. While here, dollar is now the base and the quoted currency is the Swiss francs. So $1 is equivalent to 0.7946 Swiss francs if you issue $1. That's what the base and the quoted currency is all about. Now, to add context to it, as traders, all we're just going to do is you have to determine when to buy a currency and when to sell it. All right, so we have 4 scenarios. All right, 2 major scenarios. It's either a currency is strong or the currency is weak. Then we have 2 more scenarios. A scenario where the currency is either functioning as the base currency or as the quoted currency. Okay, like I gave the instance of where dollar is the base on USD CHF and dollar is also the quoted currency on GBP CHF, GBP USD. All right, so what do you now do? Now, there are factors that determine if a currency is going to be strong or if it's going to be weak. Okay, we have economic indicators, we have technical analysis, but at a basic level, all we just need to do is know that if a currency is strong and is functioning as the base, you buy. Okay, and if the currency is weak, and if the currency is still strong and is now functioning as the quote, you sell. Okay, I'll take that again. If the currency is strong as the base, you buy, as a quote, you sell. Today, for instance, okay, there was the PMI service news and manufacturing PMI for the Great Britain pound, and it came out positive. So pounds was buying as the base. So GBP was buying today, and GBP was also the quoted currency on Euro GBP. So Euro GBP was on the sell side today. Then case scenario number 2, if the currency is weak, if it's functioning as the base, you buy, and if it's functioning as the quote, you sell. So the dollar has been weak this period, okay, in anticipation of the cut in interest rate. So if you notice on the chart, USD CHF was selling and GBP USD was also buying. That's how base and quote currency is. Okay, so that is how you'll be able to determine if you want to buy or sell, or if you want to long or short. So that said, let's quickly talk about bid and ask price, and we'll talk about spread. Now, you're either buying or you're either selling a commodity, and that said, we have so if the buyer, if you're going to buy something, they have to be what we call the ask price. So the owner of the product, let me just give an example. You want to go buy a phone. Okay, the owner of the phone will have to mention the price they want to sell the phone. Let's say £1,000,000, all right, for the phone. All right, now that is the asking price. So you, the buyer, will now have to mention the price you want to buy. That's your bidding price. Let's say you want to buy it for 700,000 naira. All right, so that's the maximum amount you are willing to pay, while the ask price now the minimum amount the seller is willing to sell. So there's always a difference between the asking price and the bidding price, and that's the difference is now referred to as what your spread, and it's one of the reasons why you take a trade. The trade will go in a loss. So for you to identify each spread for each pair, just come to your market watch. Okay, come to your market watch, right click on the market watch and click on spread. You're able to see the spread for each of the pairs. So usually I recommend trading the major pairs: USD, Euro USD, USD JPY, USD CHF. Especially on the ECN account because they have zero spread. Okay, so the lower the spread, the more you are likely to make money. That is how it is. So it's not so cool trading exotic pairs. You can see they have very wide spread, the difference between the ask and the bid price. And for context sake, let's open USD NOK, all right, and load our naked chart. Now, if we drop to a 1 minute or 5 minutes time frame, now for you to easily identify the spread, right click, go to properties, then you go to common, you can add show ask line. So with that, you'll be able to see that the difference between the ask and the bid price, that is your spread. Okay, that's your spread. And now that said, let's quickly talk about ask price, the pips and lot size. Now pip is simply means percentage in price, and it's or the fourth number after the decimal place, like in this example 0.001 is 1 pip. Okay, so it's what you're looking for in the market. You're in the market to make pips. So the movement of price from one place to another is also referred to as pip. All right, so let's easily go to our chart. So the movement of, let's go back to USD CHF. So the movement of this price from this time zone to this time zone is simply referred to as pip, and is that simple, and it's easy to calculate. All right, it's just difference in price. So if I want to know the amount of pip I have, remember I said it's fourth number after the decimal, so 0.001 is your pip. Okay, we have okay, so we have so as I was saying, 0.001. All right, 0.0001 is your 1 pip. Okay, so we now have that 0.002 now becomes 2 pips. All right, and we have 0.0009 as 9 pips. So we now have 0.0010 automatically as what, 10 pips. Just like that, just a simple arithmetic progression. All right, this now gives us what, a 100 pips. And last but not the least, 0.1 is now what, 1000 pips. Now, any number after the fourth number is referred to as what, pipette. So if I want to now determine my pip value from here manually, I just have to subtract 0.8 to this point, so around 0.89. Let's say 0.8 from 0.79. all right, we'll go to a bigger time frame. So if we go to a bigger time frame and we want to subtract, so if we want to subtract 0.809 from, let's say this level 0.8, right? If we subtract that, we'll be having 0.09, which is about 90 pips. All right, that is how you calculate your pips manually. But using the crush hair, you can actually use the crush hair. All right, you can use the crush hair for your pip. you can use crosshair, which is your Control F for your pip. You can use the crosshair for your calculating your pips. Just click on Control F, or you pick it from the chart, and you can now measure from one point, from this point. Once you pick your crosshair, you left click on it, then you drag. All right, so within a particular time frame, 0.8, you're able to tell that between 0.89, let's be more exact, 0.89 to 0.8, okay, you'll be having grossly 90 pips. So with that, to calculate the value for your crosshair, the last number is your price, while the following number is your points. The points moves, and 10 points equivalent to one pip. So we have that 90.3 is now 903 is now 90.3 pips. All right, that is how you calculate your pips. Now, the pip calculation is very important because it determines how you make your money. Okay, all right. So, and this is applicable to any pair at all. Let's open our Euro USD. So we can calculate the amount of pips moved today from this point down here. Euro USD moved an average of what? 67 pips. So you can use your crosshair for the whole week. You can check the whole of last week. You just pick the low to the high. You see that Euro USD moved an average of 148 pips. And for this week, the market has moved an average of 76 pips. All right. Now we can just measure from this high to this low too. From this bottom, you measure it to this top, is about 186.6 pips. That is how you calculate your pip count. Now, let's talk about what is lot sizing. Now, lot sizing